Take us through the Amazon story in your mind and why there is still more upside left after a big run.
Yeah, I think the Amazon story is super simple. It's that e-commerce, retail will continue to proliferate toward e-commerce from analog to digital. I think that, and over 50% of those dollars are captured by Amazon. That's the top line story. I think what's underappreciated and continues to be significantly underappreciated is the earnings power of this company. When you look at the optimizations that they've done on the fulfillment side, the opportunities on the incremental margins afforded from advertising, all of these will flow down to the bottom line. And we just think that the current street estimates aren't forecasting that. So I think it's a pretty simple thesis that, at trading at around 35 times earnings, and with earnings growing north of 50%, it's a pretty constructive bet to make.
James, it's been a long time since many of us have been watching, covering either from a business or news standpoint, Amazon. We used to talk quite a bit about the e-commerce aspect of it, but nobody really talks about e-commerce anymore because the real sexy part about this whole story is Amazon Web Services, right? It's all cloud computing. Right. Is this the only division now people care about at Amazon and the growth numbers there?
Well, I mean, it's a good point. It trades that way, right? On the AWS side, I think that the story will continue to be the same, that growth rates have bottomed out. We went through the massive optimization cycles that companies were doing over the last 2 years to try to right-size their cloud spend. And we think those days are behind us. You look at any of the comments from Satya Nadella to any of the other cloud bosses that cloud-based company bosses, that those days are behind us, which means that those rates have bottomed out, and now we should be able to get those high incremental margins as new dollars flow into the cloud. And that we were at 12%, 13% last quarter, and we think it'll just continue to incrementally grind higher from here. So the world is going in one direction. Like I said, on the retail side, same thing on the cloud side, from analog to digital services.
How aggressively will Amazon have to invest, plow back earnings, so to speak, into the company to support that AWS growing infrastructure and, by extension, future profits?
I mean, obviously, it's going to require investments. Obviously, when you look at the artificial intelligence investments that are made to improve the cloud-based services, that those dollars won't stop, and those dollars will continue to grow. That being said, it will provide a positive incremental margin relative to what the current margins are as new dollars come on, despite the elevated spend that likely will need to remain for the foreseeable period. And I think when you put it all together, the higher incremental margins on the AWS side, the improvements and optimizations on the retail side, I think that the street's just too low.